Okay, we are live. It's December 28th. I believe it's a Thursday. I think it's a Thursday. Anyways, as I promised, I will start trying to do some live streams here and there, pre-market or after the market, depending on the time I have. If you enjoy these things or do not enjoy these things, let me know down in the comments as well. If you have any specific topics you want me to touch on, do let me know in the chat below. Yeah, so let's have a look at what the markets are telling us right now. Let me load up Yahoo Finance here for some weird reasons. Oh, okay, finally. They had a new Yahoo Finance apparently, so okay, that was interesting. So if we split the screen and make this bigger, we can see, what can we see? Okay, jobless claims. US application for jobless benefits rise, but labor market remains solid. Actually, doesn't say anything. Okay. So jobless claims rose to 218,000 for the week ending December 23, an increase of 12,000 from the previous week, the Labor Department reported on Thursday. The 4-week average of claims, which smooths out week-to-week ups and downs, fell to 250 to 212,000. Overall, 1.88 million Americans were collecting jobless benefits during the week that ended December 16, an increase of 14,000 from the previous week. They continue here. This is annoying. They continue here. Weekly unemployment claims are a proxy for layoffs. They have remained at extraordinary low levels in the face of high interest rates. Now, I've been hearing from a lot of people that they are sick and tired of their jobs and they might be looking to switch, or maybe just waiting for the company to fire them because then they get some benefits. Of course, might just be an isolated event, but I think this is an interesting thing that I've been noticing right now. Overall, nothing here much to add. When the Fed started raising rates, many economists predicted that the US economy would slide into a recession. It could still happen in 2024, remains to be seen, but the economy and the job market have proven surprisingly resilient. The employment rate has come in below 4% for 22 straight months, the longest such streak since the 1960s. Hiring has slowed but remains healthy. I mean, to be honest, with rising interest rates, inflation as well, despite inflation coming down, let's be honest, things are still more expensive today than they were a year or two ago. So, yeah, I don't really see why many people would like to be living in a world where they don't have a job, because then they just can't pay the bills. So, yeah, I mean, you could understand why unemployment is low. Plus, yeah, firing, layoffs, but a lot of people are working 2 jobs at a time as well. Now, what do we have here? The NASDAQ 100 set the best year since dot-com bubble. I've seen a lot of talks about, oh, the AI bubble is now bigger than the one, the dot-com bubble, the 1960s, and stuff like that. Well, first of all, after every big tech cycle, the companies deserve to be highly valued or valued higher than what they were before, because it is costing them much less to produce the same goods that they were producing before. They can grow much faster today. This is also why you're seeing an average PE much higher than before. Why is that? Because the cost is now much lower to produce goods and services. So yes, you're getting a higher multiple. Just like before, if a company had higher margins than another, then you get a higher multiple. Since now a whole sector, a whole industry is getting higher margins. So yes, the overall, let's say, benchmark is higher than before. Just doesn't take a genius to figure that out. Yeah, again, if you have anything you want me to go over, let me know in the chat. Let's write testing chat to see if the chat actually works. It does work. Okay, good to know. Good to know. By the way, hello everyone. I hope you're all having a wonderful day. I also just released a video about going over a couple of IPOs you might put on your watch list for 2024. go watch that video now or later if you want. As for futures, currently, well, they're all down besides, they're flat-ish, let's call it. They're flat-ish. Oil, 73.63, gold, 2082. Mr. Schiff can be pretty happy with that. Ooh, USD to yen is now only 140. I believe a month or so ago, it was 150, 153 or something like that. Let's have a look. Yeah, it was much higher. It peaked 151 in November. If you are planning a trip to Japan, tough luck. Anyways, let's move to maybe some news and articles here. By the way, Seeking Alpha, if you want, there is a big promo. Link is down in the description. Big promo for the end of the year. Do check them out. I'm obviously affiliated, so you're helping me out here as well. But instead of just being locked out behind the usual 3 article limit, you'll have much more than that. So, any additional thoughts on Lemonade and profitability since your last coverage? No, Paul, nothing more to add. Was a good quarter, showing some promising results. Still a long way to go for Lemonade. Still a long way to go. Stock has gone up quite a lot actually in the last couple of months, weeks. So, Microsoft AI bet not priced in according to Wedbush says chatbot is game changing. Well, we know that a lot of companies have actually come out with their own chatbot. Of course, this is a comment by Dan Ives, pretty popular in the Tesla community. So they bumped the price target to $450 from $425. Definitely has nothing to do with the fact that the market has gone up. Has nothing to do with that. After recent artificial intelligence customer checks showed game-changing monetization of Copilot. I would say something that the integration of all of it has gone extremely fast. And I believe we talked about Copilot a month or two ago. I showed you a couple of comments from someone I'm following on X as well, who has said this already 2 months or so ago. So yeah, nothing new for those that are following this story. So Wedbush maintained an outperform rating on the stock, which is on the best ideas list into 2024. AI is set to change the cloud growth trajectory in Redmond, Washington, the next few years. By the way, Dan Ives just loves naming places. He talks about Apple, he calls it Cupertino. He talks here about Microsoft, he calls it Redmond. I mean, the guy is just a very good marketing analyst. Continues here, over the next 3 years, over 60% of Microsoft installed base will ultimately be on this AI functionality for the enterprise commercial, which changes the landscape of Nadella & Co. going forward. Wedbush expects to see a true inflection point for AI growth in 2025, with pricing, beta customers, and use cases being rolled out over the next 3 to 6 months. Microsoft is one of several companies investing heavily in generative AI as the race to tap into the technology accelerates. Let's highlight this. We believe the stock still has yet to price in what we view as the next wave of cloud and AI growth coming to the Redmonds, again with the Redmond story with fiscal 2024 with a strong competitive cloud edge versus Amazon and Google. Again, don't underestimate AWS. Google is coming out from a very small base, so they'll probably outperform in 2024 as well. With Gemini, with everything that they're coming out, don't underestimate these players. As we've seen, as we talked about actually in last week's video, companies that I don't own that will perform quite well. Google is expected to grow faster than the likes of Amazon and Apple, yet it's valued cheaper than both of those companies. So yeah, there is that. Ives and his team estimated that Copilot could add another $25 billion to the company's top line by 2025. Could very well be. I mean, Microsoft is a tremendous company. They can cross-sell stuff. bundle. It remains to be seen if bundling becomes a anti-competitive thing in the future. Wait, I'm not even showing you. I'm not even showing you the right. Didn't even show you the right page. This sucks. Okay. This should do it. So I basically went over this this piece right here. Then Ives, Wedbush talking about Microsoft. Apologies for that. Again, if you see something weird, just let me know. Just let me know in the chat so that I can make it better. Anyways, Seeking Alpha, great tool, link down in the description if you want to have some nice little promotion for the end of the year. Question here about NEO. Any chance of NEO getting delisted from New York Stock Exchange? Well, there's always a chance of a Chinese company being delisted, but I don't really see why. Out of all the companies, NEO should be the one being delisted from the stock exchange. So probability here is pretty low, in my opinion. So yeah. What else? Oh, Cathie Woods. What did she do? Cathie Woods, ARK W exits Grayscale Bitcoin Trust, buys BITO. Okay. Which is ProShares. Okay. So she dumps Grayscale Bitcoin Trust and acquired 4.3 million shares of ProShares Bitcoin Strategy ETF. In an end-of-year revamp, ARK Invest disclosed later. Okay. What else happened in those funds? So ARK Next Generation Internet ETF, ARKW, sold the GBTC shares out of an abundance of caution. Wood said in an interview to Bloomberg Television, "We're still as optimistic about Bitcoin as we've ever been." Okay. ARKW sold 148,885 shares of Coinbase Global. Coinbase has performed quite well this year. They also sold 231,102 shares of Block and 281,284 shares of UiPath. For year to date, ARK Next Generation ETF ARKW climbed 108%. Grayscale Bitcoin Trust surged 342%. Coinbase is up 451% year to date. Of course, that has pushed ARK's ETFs quite a lot this year, which means they've outperformed, which was not the case last year. Very interesting. Very interesting. Can you rank Magnificent 7 stocks according to how attractive they are at current valuation? Yes, we can. We can do that, actually. Let me pull up Koifin. We've done that already in the past, but we can definitely do that right now. Let me just do this. Let's put the number one Apple. Okay, now I know. Now I know that I have to share this tab. Let me know if you can see this quite well. Let's wait a second. Okay. If I can I zoom? No, this is not a good zoom. So I'll have to, yeah, it has to stay like this. Okay. So, put autosave off for this. Okay, so this is on Koifin. Most of you know this platform by now. There is also a link in the description for 20% off. I'm obviously affiliated, so this is one way to support this channel. So this is Apple. Let's put Microsoft as a comparison. Let's put Alphabet as another comparison. NVIDIA as well. I'll put those companies first because, as you can see, it's already pretty crowded here. Actually, let's just remove NVIDIA for now. Let's do 3 at a time. Let's do 3 at a time because otherwise, well, very, very difficult to look at this. So you have here a comparison between Apple, Microsoft, and Google. I know I'll compare afterwards the rest, and you'll just have to remember the valuations here. So as you can see, currently, this is compared with the 5-year mean of all of those companies. Currently, if you look at PE, forward PE, you've got Microsoft at 34.4 times, Apple 29.4 times, and Google Alphabet at 21.8 times. So here clearly PE, Google much, much cheaper. By the way, Apple close to 30 times for a company that hasn't grown this year. I mean, okay, I get $90 billion in share buybacks. That's pretty cool. But yeah, pretty eye-opening as well. Then EV to EBITDA next 12 months, you've got Apple 22.5 times, Microsoft 21.8 times. Here again, Alphabet only 12.3 times. If we look at price to sales, we don't really have to look at for those companies, just doesn't make much sense. So let's remove that. Price to free cash flow. Price to free cash flow, you've got Microsoft 44 times, Apple 30.2 times, and this is last 12 months, not next 12 months, and Google just 22.7 times. So again, here, Google compared to Apple or Microsoft, much cheaper, much, much cheaper. Let's move on to NVIDIA. NVIDIA, Tesla, and Meta. Let's do those. Price to sales. No need for that. Here we've got a mix actually of things. Tesla currently a PE of 73.5 times. NVIDIA, despite its outperformance, despite it being up 238% this year, has a forward PE of 25.4 times. And Meta forward PE of just 21 times, also despite being up quite a lot this year. EV to EBITDA next 12 months. Tesla, here you can clearly see Tesla is more expensive here, but Tesla, if you believe in growth story, you know that it's going to outgrow most of those companies, not all, but most. Tesla EV to EBITDA 42 times, NVIDIA 19.2 times, Meta 10.7 times. Price to free cash flow here, I can't really see Meta's price to free cash flow here, but it should be around 69.7 times, 13.9 times, NVIDIA 69.7 times, and Tesla 223.8 times. So compare here, Tesla is more expensive. Now, let's compare the less expensive of these 7 companies here. So here we've got NVIDIA, Google, and Meta. Meta on a forward PE is the cheapest one, pretty close to Google. EV to EBITDA, Meta here, yet again, the cheapest one, also pretty close to Google. But still, if you look at those companies, price to free cash flow, the same stuff. You look at those companies, those are gigantic companies that are valued at this. I mean, it's still growing quite a lot, especially at the bottom line. It's still growing. And the valuation isn't that crazy anymore, right? The valuation is not that crazy anymore because the business is suddenly growing again quite fast. The margins are becoming bigger and bigger. And like I said at the start, we are now in a period where, yes, AI is definitely giving those companies a boost in stock price. But if that was the only thing that was happening here, you would see much, much higher valuation, right? You could see NVIDIA 64.4 times. When was this? May 16, 2023. This year, NVIDIA's forward PE was 64.4 times. It's now 25.4 times. You cannot tell me that this is just, oh, the stock has gone down. No, the stock has gone up, but the business has gone up way more. So there you have, that's your answer for you. Paul says here, some say, actually I can pull, I have to learn how to use the live things, but that's why we test things out. Paul says here, some say that NVIDIA 4P is looking cheap compared to other AI plays. I also have a position in AMD. What are you thinking about these two semi-plays going forward for the next 2 to 3 years? As we've seen, NVIDIA's 4PE is definitely cheap. compared to a lot of other companies. You mentioned AMD. Let's watch. Let's look at AMD. If we look at AMD, much more expensive than NVIDIA. Much more expensive than NVIDIA on all those metrics here. That doesn't mean that AMD is not a good company. Not at all. And I say this again and again. When you buy such companies, you're looking at the potential upside. If you own NVIDIA, I see no reasons why you should sell NVIDIA. If you want to open a position, yeah, it's expensive. It's a company that's worth $1.22 trillion. It can go higher. It will go higher. It will buy back its shares. It's also paying a very, very small dividend, 0.03% yield here. But you're getting one of the strongest companies right now, and probably one of the strongest companies in the years and years to come. AMD, smaller market cap, also smaller player. I personally hold Intel. I've had Intel for quite a while. People laughed at me when I had Intel when AMD and NVIDIA were going up and up and up. I think this year Intel has shown that, yeah, maybe it can come back and fight for its leadership spot. But currently, NVIDIA is clearly king. Question here about Sea Limited. Let's pull up Sea Limited. I did a video not so long ago about Sea Limited. I mean, I think it was the earnings report. Sea Limited, year to date, it's down 23.12%. PE, I mean, despite the company saying that they're becoming more and more profitable, last quarter, again, they went to a more growth, not really profitable mode, but let's see if that can change. I know looking at forward PE for a company like this that is still expected to grow a lot is maybe sometimes not the best metrics to look at, but yeah, I mean, if you want to know, these are the metrics for Sea Limited. If you look at EV to EBITDA, much cheaper than its 5-year mean. Same with price to sales, 1.6, very, very reasonable there. Price to free cash flow, 22.2 times, very reasonable as well. But again, company like this, why buy this company when you have Mercado Libre, for example? That's just my thought. It can do very well. It can do very well. It is operating in a highly competitive markets, whether it's e-commerce or gaming, which has had its own impact in recent quarters. I'll just answer this question from David first. What's your guess for biggest market cap company in 2030? I know some people will say, oh, you're biased because Tesla is your number one position, but by 2030, I fully expect Tesla to be the number one market cap company in the world. I think 1 year from now, Microsoft will be the number one. Apple not far behind, but yeah, that's my guess. What's your perspective on health stock like Pfizer, Johnson & Johnson? I believe those are now called value plays, value dividend plays, let's call it. If you look at Johnson & Johnson, if you look at Pfizer, then yeah, Pfizer, I mean, for a company, you can get Alphabet with a forward PE of what was it? 21 times, 21.4 times, or 23.4 times. Pfizer is now 19.1 times. So not that cheap. But if we have a look, because these are dividend stocks, obviously, Johnson & Johnson paying a 3.04% dividend in the last 10 years. You had an annualized growth of 6.21%, which means 10 years ago you got 66 cents. You're now getting $1.19. Again, these are companies that I probably like Johnson & Johnson a bit more because of the variety of products that they offer. Of course, Pfizer had that huge push when we all had to take the needle. That didn't sound great. Pfizer does offer a nice dividend yield right now because it's down 41% year to date. So yeah, this is definitely a bigger value here than Johnson & Johnson. Last 10 years, annualized growth, 5.66%. If you bought 10 years ago, you got 24 cents. You're now getting 41 cents. If you look at the expectations for the analysts, as you can see, EPS this year has come down tremendously year over year. Again, the shots effect is taking a hit. Next year, next 2 years, you can see increased growth. accelerated growth, should I say. The markets are open, by the way, right now. Nasdaq is up 0.2%, S&P 500 up 0.2% as well. Dow Jones 0.1%. By the way, this is on Coifin. Link is down in the description below if you want to use that. Thoughts on SPY? What do you want to know? What do you want to know? How much higher? What? Be specific, and I'll answer more specifically, because otherwise I'll just go on and on and on and on and on. Any picks from Europe for the next few years? I watched your LVMH video and I like the company too. What do you think of ASML, AstraZeneca, and Roche? LVMH, look, incredible company. Hermes, incredible company. ASML, incredible company as well. Ferrari, ticker symbol RACE, great company. There are some great companies in Europe. I'm not going to lie, there are some great quality companies in Europe. Haven't looked at AstraZeneca or Roche before. So yeah, that's my thoughts on those companies. But yeah, I mean, LVMH, Hermes, those are companies that will do very, very well in the future. Those are companies that are dominating in the industry that they're in. So there's that. And then ASML is basically a monopoly. Let's actually have a look at ASML for quite a while. Let's see. ASML, forward PE 36.3 times, EV to EBITDA 29.3 times, price to sales 10 times, price to free cash flow 48.3 times. It's not the cheapest company out there, but it's a company that's operating in a monopoly. So yeah, you're always going to get that premium valuation unless you bought at the bottom, summer of 2022. But yes, this is a company that is also in a cyclical industry, semiconductors. But what did they have? 38 billion euros of a backlog. Should keep them safe. Going forward. What are the analyst expectations? EPS growth for fiscal year 2023, 41%. Next year, basically flat right now. So maybe, yeah, that's why you get such a high forward PE. But fiscal year 2025, reacceleration of 38%. So yeah, can't go wrong with this one. And the dividend yield here is 0.7%. It has increased in the last 5 years. Annualized growth was close to 26%. The last 1 year, just negative 12.62%. But I'm sure none of you are buying this company for the dividend. Yes. How could I forget? Yes, Daniel, you were 100% correct. Adyen from Europe, also Netherlands. I mean, they've got some great companies there. We cannot forget about them. So let's pull this one up. If you look at the 5-year mean, I mean, remember we made a video. We made a video. I am a they them now. I made a video. PE 30 times. I said this company still trading at a premium, just like plenty of other quality companies out there still trading at a premium because it is a world-class company, world-class management. Right now, as you can see, 52.4 times and still under the 5-year mean, despite it being up again over 1,100 euros. Year to date, it's down 8.54%. The last 3 months, it's up 75%. It was down 50% before. I mean, when it crashed in August. So yeah, things can change extremely fast when the market is irrational. You have to look at the company and not the crazy headlines out there. So yes, thank you, Daniel, for the reminder of Adyen. Again, there are plenty of other companies in Europe that are pretty good. In your video about AMT REIT, you mentioned satellites as potential future risk. Can you say more about that? That was a while ago. But I believe, yeah, I mean, satellites can be a risk. It's a long-term it's a long-term thing to consider, because if more and more companies like Starlink start to offer their services, then maybe you have to rely less on the towers that they operate. But again, this is not something that will happen now. This is something that will take years, if not decades, to see the full effect, the full switch. So that's basically what I meant back then. I actually haven't looked at this company since. So yeah, let's actually have a look. AMT. (3.13% yield, 4 PE, 47 time. Got a big bump actually since October. Not the cheapest. Okay. It's like dividend. Yeah, huge dividend growth over the last 10 years, or like 5 years as well. If you look at the overview, next year, fiscal year 2024, EPS is expected to outgrow sales, and the same can be said in 2025. 9% growth EPS year over year compared to just 4.2% sales growth year over year. So see, the market is definitely not really looking at, the big risk right now is satellite. No, this is something to consider in the years and years ahead. Maybe they'll invest in that as well. Who knows? But currently, it's pretty valuable. Do I like McDonald's or Starbucks better? I put both of those companies, I think, last week or 2 weeks ago. I know Starbucks took a bigger hit than McDonald's recently. So you could say that right now, maybe better to pick a company like Starbucks. But for the long term, I think I'll sleep better at night with McDonald's, because I do think that their brand worldwide is much stronger, in my opinion, than Starbucks. Also, let's be honest, Starbucks coffee is not that great, for being really, really honest. I like my Frappuccino once in a while, but other than that, I make my coffee at home. What's happening here? Nothing much. Let's see if we've got some news on Seeking Alpha. No, nothing out of the ordinary besides the initial jobless claim, which we've talked about before, the Wedbush note, small note on Microsoft. But yeah, overall, the markets are flat-ish right now. Dow Jones, S&P 500, NASDAQ, flat-ish. Let's look. The portfolio is down 0.05 today. Biggest movers are Alibaba. By the way, this is not the stocks that I own. These are the stocks that I follow. So I put it all in the Couch Investor portfolio here, so I can know what's been happening throughout the days, which is also great because all the articles, news that comes out gets attached here below. Again, Seeking Alpha, great website. You get, I believe, 30% off if you use the link. You sign up until New Year's, a couple of days after New Year's. Link is down in the description below. You help out the channel as well. So Baba up 1.5%. Palantir, same thing. Tesla has been having quite a good couple of days recently. Meta, $360. Wow, this thing was trading much less a year ago. Basically, all the rest is flat-ish. Who are the ones that are in red? Adyen is down 2% today. Unity 1.57. Do you ever need to use a company's product, service, software before deciding whether or not to invest in it? Like, for example, drive a Model 3 before investing in Tesla? No, to be honest, not really. I don't think you have to drive the car in order to invest in Tesla. It helps. It definitely helps to feel the car, but then again, you're just one person. So maybe, I would say look at the data, and thousands of people driving the car is a better indicator than just me, because that's just subjective. I invested in Tesla before I ever entered in a Tesla car. So yeah, I mean, you invest in, I'm not you specifically, but people invest in Nvidia, for example. Not a lot of people have used their data centers firsthand or have their GPUs at home or stuff like that. I don't think you need. I don't think you need. If we talk about even food stuff, I mean, Coca-Cola, Pepsi, things like that, it maybe helps with your decision, but then again, you're just one person. So I think statistics are a better use for your decision making, let's say. Some people on Twitter are making fun of Costco valuation. Do they miss something? I mean, they've been making fun of Costco's valuation for quite a while, I believe. And yet Costco has done quite well this year and actually for the last year or so. For the last years, it has done quite well. It's true that currently it's not that cheap. We're now reaching valuations not seen since December 2021, April 2022, and then we went down lower. As you can see, it has gone on a run in the last 2 months. It's up close to 50% year to date. Small dividend yield of 0.61%. Yes, it issued a special dividend of, what was it, $15 or so per share. But again, annualized growth in the last 10 years, it's up 12.6%. So very, very solid company. Probably there are better options out there if you're comparing these prices right now, there are probably better options out there than Costco. SoFi 2024, baby. I think the fintech sector will do. I think the fintech sector will do quite well in 2024. That's just my opinion, and that's just me saying this right now, anticipating rate cuts in the first half of 2023. Of course, a lot of things can change. We've had weird times since 2019, so let's see. But yeah, I fully expect fintech to outperform as a sector, in my opinion. Someone recently drew my attention to Crocs stock. Yeah, I talked about Crocs a while ago. It's definitely very interesting. I'm actually wearing Crocs right now. I know that does not mean that I will invest in the company. I've been actually wearing Crocs for more than a decade. But yeah, it's trading at a forward P of 7.9 times. EPS fiscal year 2023, year-over-year growth close to 7%. Next year, just 4.3%, but fiscal year 2025, 8.6%. You can look at those numbers right here. It's interesting. I believe that they have taken a margin hit because of the acquisition of HeyDude and that segment. But yeah, overall, I mean, it definitely does not look like an expensive stock. But let's see. You can see here, gross profit margin has come down in the last couple of quarters, comparing it to the last 12 months. So yeah, that's why you see also it's down close to 13% year to date. But overall revenue has continued to go up. Free cash flow positive, $500 million in fiscal year 2022. So yeah, I mean, some say this is a fad, but could be that this is just a thing that for 5 years it does pretty well and then it just goes away. Could very well be. But interesting company to look at. I see SoFi post everywhere on Twitter. Why? It's called X, David. It's called X. Why do so many people like that company? Its popularity reminds me of, it's to be fair, it's a company that gets a lot of attention. So a lot of people post about it, just like with Tesla, just like with Palantir, just like with a lot of, let's call it cultish stocks. Gets a lot of attention, lots of likes, lots of views. So people talk a lot about that. Plus, I believe it's a good company, nice CEO. So a lot of people talk about that. It's also, it was a SPAC. Don't forget about that. So probably a lot of retail investors are holding this. Maybe that's Maybe that's the reason, but it's definitely a business that is doing quite well, much better than a lot of other garbage specs out there, for sure. Yeah, Anthony Noto, great CEO. Great CEO. Crossroads, Roy, hi. Thanks for watching. If only Block had such a great CEO as well. Imagine what could have happened there. But no, there's a hobo at the realm at Block. But yeah, SoFi, great management. I mean, imagine going into the no student loan payments era when that was arguably the biggest segment for SoFi, and still managing to grow the business extremely fast and extremely well. I mean, look, we can clearly see that right here. Revenue continues to go up despite getting a huge hit from that student loan repayments pause. Yes, free cash flow right now, it's bad. Q4 should be the first profitable quarter for the company. Gross profit margin has come up. Members have gone up. The company is becoming more and more profitable. It will take some time until it becomes really a cash flow machine, but give it some time. It's a company that's worth less than $10 billion. Price to sales 4.1 times. Yes, more expensive than the usual 1 to 2 time that you want to see, but still, yeah, it's a company that, look, sales growth 33.3% year over year, 2023. Next year, 22.5% with EPS of 9 cents. In fiscal year 2025, another 17.8% growth for sales year over year. And we go EPS from 9 cents in fiscal year 2024 to 25 cents in 2025. It's a company that will still grow quite fast. If you're in it pretty early, I think it might be a multi-bagger in the year to come if they continue to execute the way they've been doing in the last couple of years. I don't see any indication why that should not be the case, or that will not be the case. Do you find it difficult to buy more stock at higher price and dollar cost averaging up? Yeah, I mean, how can I answer this in a better way? Good morning, Bert. Good morning. Obviously, dollar cost averaging when things go up can mean two things. One, the market goes up, so everything goes up, doesn't really matter what stock you're holding. Or two, the business is doing much better, and so the stock goes up. So there is a small difference here. Of course, if the stock goes up 50% in a matter of weeks because it was undervalued before, and now just the market realized that, oh yeah, maybe this company should be worth more, then yes, I'll probably wait. I'll probably wait for a red day or so. And then flip side of things is when things go bad, the whole stock market can sink the whole ship. Doesn't mean that the business is not doing well. So yes, sometimes that makes it easier to pick up shares when the stock goes down, but really it depends. It depends on the different scenarios here. Comment here. So PayPal seemed to be the best buying opportunity right now, not much else. But what is your target where you'd sell? So I agree. I agree that PayPal, I've been saying this for a while now. PayPal is not in my core portfolio, it's in the trading one. I actually have a very, very good cost basis of now $55, $56 or so. So I'll probably sell most of what I put in when it reaches close to $100. I know I sound very greedy, meaning I'm probably going to double that position if it happens. This is best case scenario, by the way. They still have a lot of execution left. I said it in the past videos. Q1 and outlook for 2024 will definitely decide for me whether or not I will leave PayPal in the trading side of things or put it in the core portfolio. Because if things can work out, this can be, for me, at my price, something that will go up over 2 to 3x over time with buybacks, with execution, with margins going up. a lot of things have to go right for it to reach $100, $150 or so. I don't know if it's going to happen in the next 12 months, 2 years, 3 years. I don't know. But I do know that my risk reward here benefits the reward because of the time that I entered that position. So yeah, I'll if it somehow hits $100 in the next 12 months, I'll just sell the amount that I've put in and just let the rest ride. That's just my opinion. 55.5 dollars for PayPal. I mean, again, risk reward here, I think we all can agree, unless you are very skeptical of PayPal, it being a dead company, not going anywhere, which I've showed you many times in many videos that is definitely not the case. Definitely not the case. Do you plan to have a significant portion of cash in your portfolio or 100% stock? No, it's usually 5%. 5% cash. Then again, because I now have 2 trading positions, Robinhood and PayPal, if they hit my targets, which I've just discussed before, faster than I expect, then that will increase my cash position in the core portfolio. Or if I see another good trade, I'll put it in that. Very important to note that I do not have any capital gains tax. So that's why I can speak the way I'm speaking right now about my positions. dLocal has been trading flat while other fintechs have run. Doesn't make sense. A lot of things don't make sense. PayPal has just gone up, only 7-8% or so, while other fintechs are up 50%, if not more. Like I said, some things do not always make sense. But since you mentioned dLocal, let's put it up. Let's put it up. That's why we do these live streams. Forward PE 25 times. Year to date, it's up 15%. EPS is expected to grow this year 55%, next year 33%, year-over-year growth, that is. Fiscal year 2025, another 30%. I believe there's still some skepticism behind this name because of the short reports, everything that's happened with dLocal. But I mean, we have debunked this on this channel. The company has debunked this as well. So there is that. Are you planning on hosting more live stream regularly? So if you guys enjoy these live streams, then yes, definitely this is something I will consider doing more and more in 2024. That's why I made a poll on YouTube if you guys enjoy live streams or not. So yeah, definitely something I'll be looking out to do more. Whether it's going to be pre-market or aftermarket remains to be seen. You tell me. You tell me in the comments what you enjoy more, and we'll see if that works out. Fiverr as well, 100%. This thing has literally done nothing since, let's say, the bull market has started. Yeah, it's down 4.26% year to date, despite becoming more profitable this year. Forward PE 12.9 times. I know this was a high growth company. Currently, if you've been watching my videos, you know that this is not a high growth company anymore. But they have been saying for quite a while they are now sacrificing growth for profitability. And then once the macroeconomy stabilizes, let's say, they will start and reinvest in growth. Let's see. They're definitely becoming more profitable than many other high growth stocks of the pandemic era. I mean, just $1 billion in market cap here. If you see the expectations for the next coming years, yes, it doesn't make any sense. I know there are fears of, AI will destroy this company. Clearly, that has not happened. Clearly, AI is helping this company because of the multiple services that it can now offer in that category. With regards to Alibaba, there are some hairs here always flying in my nose. Do you think Baba can run even with the lawsuit against it? Is there a new lawsuit that I'm not aware of for Alibaba now, or is this an old thing? Because Alibaba, it's up to date 2.15%. This lawsuit. Okay. Alibaba fails to get suit dismissed in United States court over alleged counterfeit toy. Well, again, I don't really see this as I'm talking about this right here. I don't think this is the reason why Alibaba is not running. And I believe if they go after Alibaba for a counterfeit toy, they can go after Temu, they can go after Wish, they can go after Shein, plenty of other candidates of selling garbage Chinese stuff. So yeah, I don't think this is the reason why it doesn't run. I think next year, if Shein, I talked about this in the latest video about IPOs, if it does go public and it gets a positive reaction, I think it could be a boost for Chinese stocks. Remains to be seen. There's still a lot of risk attached to it, but like PayPal, Alibaba right now, despite it being a Chinese company, the risk reward here just doesn't make any sense. No, I do not own Alibaba. I'm not being paid to push Alibaba. I'm not even pushing Alibaba. I just think that a lot of people do own this stock, have been hit, and I still think it just doesn't make much sense. I own Shopify at $65. Wondering your thoughts on it. It's right under the 200-day moving average on weekly. I don't own Shopify anymore. You probably seen that video a couple of months ago. Of course, the stock has done well. Amazon has done well as well. It's a great company. It's a great company. There's nothing more to add to that. Great company to hold for the future, becoming more and more profitable as well. It was a good move for them to sell out of the logistics business. They had no business doing that on their own. I mean, Amazon showed everyone that it's a tough business to operate, and so it was a good move. Year to date, it has done quite well, but as you can see, that's because the company has become way more profitable. Free cash flow is increasing quite a lot. So yeah, you've got a good price here. You're up on your position. I don't see why you should sell a great company like that. But that's just my opinion. Of course, you can do whatever you want. Do you own Coupang? I do not own Coupang. I know I talk about a lot of companies on my channel. That doesn't mean that I own every one of them. I just cover a lot of companies because I know it might be interesting to a lot of my viewers. I do not own Coupang, but this stock as well, as I said in the latest video. It's a company. It's not even a Chinese company. That's the thing. It's South Korean company. It's a very, very well-run company, great CEO, good business, and yet hasn't really done that well. StoneCo. Yeah, I'm planning on doing a 2 or 3 part series on fintech stocks going into 2024 in the coming days. So StoneCo, SoFi, Robinhood, PayPal, Square, Affirm, those companies will feature in that video, and I'll try to keep it as short as possible. We're going to have a major overview like we're doing right now, but it will be in videos separately so people don't have to spend 53 minutes watching the live stream to get the answers on specific companies. I know a lot of you actually like live streams, but when we talk about specific things, you prefer short form videos, short form being 8 to 10 minutes videos. So we'll do that. Did you look into the company Oracle? I believe we talked about Oracle for 2-3 minutes or so, not so long ago. It's another one of those big players, cloud players, software as well. I have Amazon. I think Amazon will do very well, especially AWS. Oracle could be a good play. I have not looked into Oracle recently, so let's do that right now. Oracle up 31% year to date, 4P 18.1 times. Looks cheap. EPS growth for fiscal year 2024 only 7.7%, but is expected to accelerate in the next 2 years. Okay. Yeah, I haven't looked at their financials. I don't know how competitive they are with their pricing, margin-wise, stuff like that. So I don't know, but let's look currently more expensive than its 5-year mean, clearly. You can see here PE, EV to EBITDA, price to sales. If you want, we can compare it to Amazon. Here it is. Poof. If we compare it to Amazon, of course, Ford PE, much cheaper than Amazon. EV to EBITDA, a tiny bit cheaper than Amazon, not that much. Price to sales, more expensive. Price to free cash flow, cheaper. But as I said, expect 2024 to see a very, very profitable Amazon that will have billions and billions in free cash flow. Yes, New will be in those videos as well, for sure, 100%. Thoughts on Vishy as a dividend play? Vishy is one of those companies in my dividend portfolio. Again, a company that has not moved that much this year, despite operating quite well, despite increasing dividends as well. So, it's okay. It's back up to 31.8. Still very good play, good yield, solid dividend play. Yeah, I hold it personally. So I'm biased, but it's a quality company. It's a quality company. I very much like the Vegas play here. Is Fortinet a long-term hold? I believe Fortnite. So this is Fortinet right now, lower, cheaper than its 5-year mean. If we look at what has been happening with the company, I've showed this in the other video. Shares outstanding has been decreasing, free cash flow per share has been increasing. So yeah, you cannot go wrong with a company like this. Of course, increased competition in the industry that they're operating in, but it's still a very, very solid company. They know that they have to do a bit better, but as you can see, it's a business that is still doing quite well. Of course, Palo Alto Network, great company as well. CrowdStrike, great company as well. More expensive, growing faster also. Canadian Pacific, I've not looked at that. I know, what's his name? Joseph Carlson. I think he holds it. I think he talked about it. Maybe I'm mistaken, but I think I've heard about that company on his channel. Yeah, have not looked at it before. But if you're here and you're asking, then I appreciate your time. So let's have a look. Canadian Pacific. This one? Maybe. I don't know. If it's not this one, let me know. Compared to its 5-year means, more expensive, PE, EV to EBITDA, not by that much. Shares outstanding. So what happened here at the end of 2021? Did they acquire a company and that's why they jumped here? Yeah, this is the thing. When I don't follow a specific company, sometimes I'll have more questions than answers. So the question here is, what happened? Probably they acquired another company here, because otherwise I don't really see why you see this huge jump. Yes, they made a user acquisition. Okay, so it makes sense. If you didn't own Tesla stock, how would you build your position having cash available? Dollar cost average? Yes, probably. Start with a starter position and then dollar cost average on the way down or on the way up, depending on how the business is doing and depending on how the market is doing as well. I'm going to talk more about Tesla on the Saturday weekly recap video. We've got some numbers and numbers for the Cybertruck. It basically being sold out if you trust that the pre-orders are at 2.3 million. Again, pre-order, you only have to put $150 down or $100 down, depending on where you are. So you can always cancel that. But this means that it's basically at the current capacity, which was 250,000, which is what Elon Musk said. It's close to 10 years, a 10-year backlog. So yeah. But they have the Viking, the Viking investor? No, the Australian guy, Sam. I think Sam was his name. Sam is his name. On YouTube said that they're working on the refreshed Model Y already right now, which I think is a bit weird that they're doing it already so soon. The Project Juniper, but who knows? 2024 is going to be an interesting year for Tesla as well, as interest rates come down, more demand for EVs, refresh Model 3 in the United States, Cybertruck ramping up. Hopefully, we're going to see some positive ramp up numbers for the Tesla Semi as well. They're still testing stuff out there, so we'll see. Energy side of things, still doing very, very well. Hi, Fabio. How are you? Canadian Pacific acquire Kansas City this year, and okay. With Mexico and nearshoring starting to grow, it can be a great play. Okay, I didn't know. So yeah, could be. It's one of those companies that probably you buy and you just leave it in your portfolio for years and years, because they are so dominant. It's yeah. Thanks for the information, by the way. Okay, we are live an hour already. If you've got more questions, let me know. And if not, go watch the latest video, best IPOs to watch in 2024. It's currently live. Let's see if the market did something different. No, still flat-ish. Nothing more has changed here. If you look at the companies I follow, some stocks that have opened up a bit higher are a bit down, but overall, nothing has changed. Tesla is in the red right now. Okay, big deal. SoFi down, but still over $10. That's fine. Pinterest has had quite a good year. Happy for them. Happy for my position. Hood over $13, holding strong there. That's good. HIMS, for those still under $9. There are many companies that you will see a major move probably in the coming earnings season, which I believe is a month from now. Actually, in the next in two weeks and a half, some companies will already start the earnings season. So yeah. If you can also add Adyen, yes, Adyen is definitely. That's why it's going to be a 2 or 3 part video, because there are plenty of fintech names that I wanna talk about. Full recap of 2023 and expectations for 2024. So it's probably going to be 3 or 4 per video. Entrance Point in Meli. Meli has done very well this year. This was one of the 3 picks for me in 2023. Very happy with the performance of the business and the stock. Stock is up 86.9%. Despite that, 4 PE is 49.1%. You can see here EPS year-over-year growth in fiscal year 2023, 137%. Next year, another 44%. The year after that, 35.5%. I mean, it's a great company. We have here yesterday, Wedbush raises the price target to $1,800. Great company, great management, great area to grow right now in. New leadership in Australia. The country. Whether you like the guy or not, I don't really care. It cannot get worse than what it was for years and years in Argentina. So yeah, Mercado Libre, great company. Any thoughts? Look for weakness or open a starter and size accordingly, because yes, it has gone up quite a lot. You never know what might happen in 2024, but do do have a starter position if you love the company, if you love the business. If it goes down a bit, you dollar cost average on the way down, but it has to be for the wrong reasons that it goes down, meaning the business goes up, but the market decided the stock needs to go down. Always a better feeling. So yeah, that's my thought with Meli. It's in the top 4 position in my portfolio. So yeah. Oh wait, so can I do this? This is much better actually. Yeah, by the way, this is Koifin. Link is down in the description. 20% off. You help me and you might help yourself as well become a better investor. Same with Seeking Alpha. There is a link in the description for 30% off. My pleasure, Lidor. And I really hope 2024 will be the year of fintechs and finally fintech will come out of doghouse. Look, it's difficult for fintech to be highly performant when interest rates are high. This is just facts, nothing to do with good businesses, despite some of the fintech players not having such a great time coming out of the pandemic. So yeah, of course, talked here about PayPal, for example. It's very undervalued, but again, transaction margins have come down. Management refresh. If they can work their SHIT out, it can really go up quite a lot. I mean, go up like the likes of Meta, Nvidia, stuff like that have gone up in 2023 because the business is starting to accelerate and going to the right direction. They've got a lot of great business segments, Braintree, PayPal, the checkout, the business itself, lots of data. Buy now, pay later is doing quite well for PayPal as well. So it's a matter of good management taking this great business into the right direction, and shareholders will get rewarded. I mean, again, I'll say it again and again, free cash flow for that company has stayed flat for a couple of years now. So it doesn't take that much to push this stock to higher highs, because despite free cash flow being around the last couple of years, between $3 to $5 billion, shares outstanding, they've been buying back more and more shares each and every year. Free cash flow per share is increasing because of that. If they can become more profitable and continue to grow, then yeah, expect them to buy back more shares for sure, which should definitely help. Should definitely help with those horrible returns here. Anyways, over 1 hour, quite hungry. Again, if you enjoy these live streams, do let me know in the comments if you want to see more. Maybe I'll try and do tomorrow, also before the market opens. And as always, Sunday is a more chill gaming stream. For those of you that have watched last week, we streamed on YouTube and on X simultaneously. So yeah, make sure to be there if you wanna ask chill questions, gaming, sports, stocks, you name it. Be there or be square, or block, should I say. Anyways, hope you all enjoy this. Oh, one last question. Okay. Thoughts on YCL? To be honest, I have no clue. No clue what it is. YCL. Oh, this? Is it this one? Before you leave? Okay. To be honest, I mean, I only mentioned the yen beforehand because I loved Japan. I was there a year ago, so yeah, I enjoyed the currency being a bit cheaper. So my trip was cheaper, but I'm not a currency expert, so I rather not give my opinion on things because it can probably be extremely wrong. So I'll just plead the fifth here and not say anything. But yeah, remains to be seen what happens with Japan. Anyways, we'll do a live stream tomorrow, live stream on Sunday, and then maybe next week, each and every day or every 2 day. Figure US dollar will weaken with our rates going down. Yeah, yes, could be. I mean, compared to Japan, yeah, it could be. Again, depends on what the Japanese economy does. Plus, Japan is it the largest holder of the US dollar, or is it still China? I think it's still Japan. But we'll see. We'll see. Anyways, thanks for joining. Have a good day. Have a good end of the week. See you all in tomorrow's video and live stream. Bye-bye.